Hey, what's going on, everybody? Welcome back to the channel. So markets are at all-time highs today. I did take a trade on PayPal. I was bearish today on PayPal. Made a little bit of money, made a 14% gain in my small account challenge today. And PayPal ended up going up all the way to about 250. So I'm glad I got out where I did a little bit of scalping, right? We have that trade over here. We will get into that later on today. But before we talk about my 14% gain in the small options trading account, let's go ahead and go through a little bit of the news. We've got the European central banks keeping rates unchanged, quantitative easing unchanged. They plan on, just like here in the U.S., spending a lot more money. And this isn't just spending, this is deficit spending we're talking about. The state and the Fed, they don't produce anything, right? They don't make any money. So when they talk about spending money, whose money are they actually talking about, right? They're talking about my money. They're talking about your money. So the other thing that we need to consider is that, to pay for all of this, I have a feeling it's not just inflation, but there's going to be other taxes. All right. We already know Biden's going to try to jack up the corporate gains tax, but to pay for all of this deficit spending, the stimulus to quote unquote pull us out of this, CV-19 economic depression, to pay for all of this, I have a feeling they're going to not just through inflation, but they're actually going to tax us more and more and more, whether that's carbon emission taxes, breathing taxes, right? We really don't know. But you have to consider that a lot of these states and these cities have not taken in a lot of revenue the past year because the economies have been shut down. And they're going to have to make up for that, right? So in Europe, it's a similar situation. The European Central Bank left monetary policy on hold during its January meeting as policymakers took a wait-and-see approach following last month's decision to expand its pandemic emergency program by $500 billion and extend it to at least the end of March. So maybe not quite as much as what Biden's talking about with $1.9 trillion. They're spending only about 500 billion euro. But still, we're going to have to pay for this down the line one way or another, whether it's through taxes or inflation. Some of the other headlines here, you've got Canada, new housing prices rise about 0.3%. That could be inflation, right? We see it here in the U.S. with, consumer goods. Consumer goods are going to get more expensive. All of this stuff. What they're doing, the money printing, the stimulus programs, it affects every aspect of our daily lives. That's why we should pay attention to it. You've got crude oil. Now it's back at 53, but it did dip under 53. It was something like 52.70 when I checked it this morning. Gold is actually hanging out at around 1870. Which is good to see. Silver is back up closer to $26. Now, I do think silver is going to face a little bit of resistance here. Let me go ahead and go to the silver futures chart. And let me see if I can get yeah. So I think we are kind of in a supply area. Will we get all the way back up to 27 in the next couple of days? I'm going to be a little bit more patient. It doesn't have to. I think eventually we will. But the fact that silver has sort of bounced right back from, you can see we hit that low a few days back. It was about $24 was the low, and we bounced all the way back. We're almost back at 26. So that's good to see. Copper at 364. Copper is actually at I want to say it's like a 3-year high. I took some notes the other night when I was doing my macro analysis, but copper has hit, I think it's like a 3-year high. Let's talk about oil a little bit since I mentioned crude. Crude did dip below the 53 level, after API data had showed a surprise build in U.S. crude inventory. There's also growing demand concerns due to CV lockdowns. There was actually a CV outbreak in northern China, right, in Hubei province of all places, and tens of millions of people out there were recently in lockdown, or they're in lockdown right now. So all of this is sort of weighing on the oil markets. Let me just see if I can bring up the oil charts here. This is the crude chart. Remember, we went into the negative last year, or it was getting close to this time last year. But all of this is definitely cause for concern, but perhaps oil is trading in a range now, right? When you look at even some of the oil stocks like ExxonMobil, a lot of people are like, wow, ExxonMobil's really made some gains recently, right? We went all the way down from 31 back in, what was that? The end of October, and look at us now, 51, right? 50, 51 area, 48. But when you look at this on a higher time frame, right, you can really see the damage that has been done, right? The perhaps irreversible damage. We did try to bounce. This was the March low here. We did try to bounce, and most of XLE looks like this. The ETF, Chevron looks like this. All the charts look very similar. Perhaps oil is trading in its new range, and perhaps these oil stocks are now trading in their new range. Will we ever see the day where ExxonMobil is, $98 again? I don't know. Looking at this chart, I think it's still a very long ways away. I'm sure there's plenty of people that are thinking about, piling into this, into ExxonMobil or into Chevron right now. I'm going to wait it out a few months and see if we can get back down closer to the $30 level. I could be wrong about this, but perhaps this is the new range that oil is trading in. Copper, right? I was looking for my notes on copper. So copper has been really supported. Let me bring up the copper chart here. Most recently, you can really see this. This is going back a year now, right? But most recently, let's just look at the past. Let's look at the past 6 months. Well, let's look at the past 3 months. Okay. We have a lot of China's fourth quarter GDP data and their industrial production data that has really been, I guess, boosting hopes for demand recovery when it comes to copper. So last week, copper had hit, it wasn't a 3-year high, it was an 8-year high of $3.70, $3.7 per pound, I think is how they measure that. So we've seen as high as $4.48 per pound back in 2011. To me, though, I just, this is what I'm sort of seeing. It looks extended, right? When you look at it on a higher time frame, this is where we're at, the past year here. This is the past 10 years. I think it looks a little extended. On a 25-year chart, we definitely look like we're a little overextended. So I wouldn't be surprised to see, a slight correction. But I would be interested in getting in some of these copper plays long term, because I think copper, even silver, right? Let me go back to the silver chart. These are kind of interesting ways that you can play the EV market, because electric vehicles, they're going to need these commodities, to build this new infrastructure, this greener infrastructure. And so having a little bit of exposure to that, not a bad idea. What else here? We got cotton hits a 28-month high at $82.21 US dollars per pound. We also have earnings for a few companies like IBM and Intel. Intel is a stock I've been following. What is it, INTC? It looks like Intel tried to make a little bit of a go here in anticipation for earnings. You can see that Intel has had a rough few months If I go to the weekly chart here, well, it does look like we're attempting to recover. Yeah, Intel's really, had a run up the past couple of days, past week or so. Let me go back to this 30-minute. No, let me go to the 4-hour chart. I haven't actually watched this in the last couple of days, but yeah, wow, that is something. So we went from $45 all the way to $61. Just today it's up 6%. So probably a little bit too late to be piling into that, but I know they're reporting earnings. They might have already reported it by now. The DXY, let's talk about the dollar, y'all. I love following the dollar chart, and I love following all of the dollar bears, but I do want to offer the alternative point of view. So as you can see, we definitely pulled back. The dollar pulled back on the DXY at least. And again, the DXY is not everything, right? It doesn't have all the information. It is limited because it's only measuring the dollar against other fiat currencies. But we're back now down closer to about 90 instead of closer to 91. The DXY continues to pull back on the daily. This is a daily chart. And so, this is definitely going to validate what a lot of the dollar bears are saying, that the dollar will never recover. It's just going to keep on going down and down and losing its purchasing power. And some of that may be true, right? Our purchasing power is not going to ever, be what it was. But that being said, most of these dollar bears, they're only considering the supply side, right? They only talk about the stimulus. They only consider the money printing, the quantitative easing. What a lot of them do not consider is the dollar-denominated debt and all of the demand in foreign countries for dollars, right? In order to trade, right? In order to have these international relationships, they need dollars. Maybe in some areas there's local currencies that are being used, but if you look into this, that's usually it's usually because they don't have enough dollars. They have to resort to using other currencies. And then to pay off their debts, they still have to convert those local currencies into dollars. So it can be, kind of a big mess for some of these countries that are having trouble getting their hands on dollars. But that, considering all of that, the demand for dollars could be huge, right? We could see some real strength in the dollar in the coming weeks, months, and the next year or so. So yeah, going back to just general earnings for the SPY, Netflix really did rise after earnings. Actually, let me go to Netflix real quick. What is it? NFLX. Yeah, you can see Netflix even, Netflix gapped up on the daily. But I think most of these stocks, they're not going to quite have that response. If you look at the SPY, we're at all-time highs. We did hit all-time highs. We closed around all-time highs. The Dow is at all-time highs. I think NASDAQ is still at all-time highs. So, I wouldn't be surprised. I'm not trying to be bearish here, but I would not be surprised if we see some sort of correction. And so I will be looking out for that. Even with PayPal, right? Like a lot of people are still very bullish on PayPal, and I love trading PayPal. Don't get me wrong. PayPal is a lot of fun to trade. Just enough, volatility, especially in the morning where I can usually get a good play. But we did break the all-time high, but we did not stay there, right? It was kind of a weak, kind of a weaker breakthrough. The all-time high was about 249 something, and now we're at 250, or we hit 250. You can see that right here. But it was quickly brought back down. Let me go ahead and show you my trade. We'll actually look at this on a 1-minute chart. So I was bearish on PayPal this morning because we did have heavy supply. We had previous pivot points that were higher, so we were making lower lows and lower highs pre-market, right? You can see that. This is after hours and pre-market, blah. So we got lower lows, lower highs, lower lows, lower highs, and these are some of the reasons I was bearish. But when we opened up, right? We opened up and immediately dropped under the moving average, under VWAP. And we went all the way down here, but there was a lot of demand, so it quickly was brought back up and closed at about 245.68, I think is what that says. And then we had another bottoming tail on a green candle, and a lot of people would have taken this long here, right? I might have taken it long here. I'm not an expert, right? I could have made the decision easily to take it long here. And remember, we're on a 1-minute chart. And as you can see by my trades here, I was in very, very soon. The first contract I bought was for 115, and I sold it for 159. So that was not a bad profit. I got in probably on this candle, and I was out by the bottom of it. Well, no, sorry, my exit's right here. So yeah, I entered right about here, right? Entered on this, at the close of this green candle, and a lot of people would have taken this long, but I went short. I bought a put, right? I went in for one put. We were under VWAP, and we were under the moving average, and the moving average was going down. These are all bearish signals. So I went ahead and took it short, playing the short side, I should say. Got in on a put, and I exited right down here. Second trade, I got in right about here when we were sort of getting rejected at VWAP, right? You can see the purple line, the VWAP line, was acting as a resistance area. And so I entered, and then boom, got out somewhere down in this area here. I didn't want to stay around too long because I knew we had a lot of demand, right? It was, even though we did have a drop, like when you look at this from different angles, it does look like quite a drop, but it's very easy for these stocks to reverse on you. I've never had a lot of really good luck from just buying and holding this stuff. I like to get in on the 1-minute chart, get in and out. Yes, sometimes you have to hold through like a little pullback once in a while, but most of the time I like to get in and out and just be done with it, right? After about 1 or 2 trades first thing in the morning, walk away. Could I have hung out all day and sort of waited for this play, waited for this setup? I mean, I guess so, but I got other things I want to do, right? I had to go to the gym. I did a little bit of grocery shopping. I could have stayed around and waited for this double bottom and, tried to play one of these moves right here. But that's not really my style. My style is getting in first thing in the morning. I want to close out cash every single day. I'll show you my P&L real quick. We're up 14%. I did take a couple losses. We talked about that last week. Took a couple losses on some swing trades, right? I tried to swing trade PayPal and just didn't go well for me, right? So it's like my style, what I'm good at is getting in and out on the 1-minute chart and just taking a small profit, like $74 on the day for the amount of money in the account. That's a 14% gain, right? Like I'm technically outperforming the market, every market today, except maybe Bitcoin. So speaking of Bitcoin, that was my trade on PayPal. Speaking of Bitcoin, another reason people are bullish on PayPal is because of the new cryptocurrency features where I believe you can buy cryptocurrencies, sell cryptocurrencies, and you can trade cryptocurrencies. You can actually buy things with Bitcoin. Yes, maybe they convert it first to, dollars for you, but they claim you can buy things in Bitcoin. Cryptocurrencies though, all right. This video, Janet Yellen, Treasury Secretary and ex-Fed chair on money laundering and cryptocurrencies. She basically says in this video, right, this is when she was appearing before the Senate Finance Committee, and they approved her, right? They rubber stamped her for Treasury Secretary. But she essentially said, in not so many words, that she wants to ban Bitcoin. All right. And so I wouldn't be surprised if we start seeing some pushback from the Biden administration on cryptocurrencies. You also have a Fed that wants to release their own digital coin, digital wallet. So this stuff is going to come to a head. A lot of people think that, the government is never going to step in and try to do something about this. But I don't, obviously I don't know exactly what's going to happen. There's no way to tell. But it's some pretty concerning rhetoric, especially if you're involved in cryptocurrencies, right? You should go and listen to what she says here, what Janet Yellen says. And let me know if you are as concerned about this as I am. I'm not a big fan of the cryptos, mainly because they're so on grid, right? A lot of people like to think, oh, they're untraceable, untrackable, but that's not actually true. They catch people, they catch drug dealers all the time. They catch all kinds of criminals all the time because of the cryptos that they're, sending each other. There's so many examples of this, right? And it's not as untraceable as a lot of people think. But a piece of silver, a piece of gold, right? I've got maybe $400 worth of silver around my neck right now, right? I'm wearing about $400 worth of jewelry, silver jewelry, and nobody knows this, right? When you have silver or gold just sitting at your home, nobody knows it's there. And so, this is why I think I really do appreciate the precious metals and the hard assets a lot more than digital currencies, right? And I'm not that hyped up about currencies in general. I like to collect, star notes, but I don't have a lot of dollars, right? Most of my dollars are just sitting in my trading account, right? I don't have a lot of dollars sitting around in the bank. I think I might have like, I don't know, about maybe like $7-10 in my bank account right now. I keep enough in there to pay some of my bills, my phone bill. So if I wouldn't keep, non-digital currencies, right? If I wouldn't keep cash currencies around, why would I keep digital currencies? It's a question I'm asking myself, and a lot of people, all the time, you see it in the comments. They say, crypto's the future, this and that. I don't know, right? Doesn't say nothing about crypto in this holy Bible on my desk, right? The Bible talks about silver and gold, and it's always mentioned silver and gold. This is God's money. I just don't see how we could go wrong. So we talked about Janet Yellen. We talked about the markets, of course, at record highs. Apple jumped up as well. Apple had quite a run up. If you guys want to take a look at this, I know there's some people invested in Apple last couple of days. Just look at the 4-hour chart. So this is a great example of a wedge and then a breakout, right? We had a wedge pattern form. You can easily see that. And then boom, right? The price consolidates. It gets tighter and tighter and tighter. And it's like pent up energy. It just has to go somewhere. It's either going to go up or down. In this case, boom. If you had bought in calls right here, right? If I had bought in calls right here, I should have. I would have been a thousandaire by now. So, but you can see we're definitely getting rejected at these higher levels. I think 139 is the all-time high. Yeah, well, 139 is like the all-time high. I just don't think these markets, they're just so overvalued. I don't know if we're going to see Apple go into 140, 150. Maybe we will, but I don't know. Like, look at Facebook. Even Facebook right now, it was super overvalued, right? Facebook had quite a run up the last day or so. I mean, look at that. Imagine buying calls down here in this demand zone, right? And I charted this demand zone from back in, what was that, September? This is like the September area. So I knew there was a chance this could pop. I didn't take it, but maybe I should. Maybe I should be taking some of these. But, a lot of this is in hindsight, obviously. But yeah, Facebook, super overvalued. All right, something else I want to talk about is the general economy, right? It's not looking good, guys. Jobless claims are still like damn near 1 million, right? We say this every week. The jobless claims come out on Thursday morning. The Labor Department reported unemployment benefits for the week ending January 16th being at about 900,000, right? 900,000 new filings. Now, the thing I'll say about this, the only thing I'm going to say about this is listen to the propaganda here. They say the labor market reported lower than expected filings. Lower than, so as long as we're not at 1 million, right, everything's cool. No, everything is not cool. The economy is in dire straits. We are, I'm just very bearish on the economy. This is my opinion, that we are entering a financial and economic depression unlike the world has ever seen. And even if the stock market is at all-time highs, Main Street is suffering, and I do believe a lot of the policies from the new administration are going to make things even worse. In a lot of ways, Trump made things, bad, right? Trump talks about how he was, fighting communism, and we have to fight communism. We have to fight the Marxism. And he is probably the most socialistic president we've had since FDR, when you really think about it. I mean, he's calling for $2,000 checks. So I just don't see, it seems kind of hypocritical, right? Trump is pretending to be the anti-socialist president, but, he was actually a huge socialist president. Biden is going to be even more so. And with Biden, you've got the demographic angle to it too, right? Some people may get some, and some people may not get anything simply based on who they are, right? Based on their heritage, shall I say. So that is the analysis. That is the the market news for today. Let me know what is on your watch list. What are you looking at? What are you trading? Where are you putting your money? And with that, I hope you guys have a fantastic rest of your day. Remember to follow me on social media. I'm on Instagram at Marlo Cremidas. We're also on BitChute. We're on Parler, Gab, all over the alternative. If you're not on alternative tech, you are crazy. Get over there. Join us. And big shout out to everybody on Patreon, everybody supporting me through PayPal. Links for all of my social media are down below. And I will see you next time. As always, God bless.